Havells is set to post its Q1 FY22 numbers, and before we talk about Havells numbers, let's just talk about the overall consumer durable space. Now, the second wave has disrupted the strong demand momentum in the durable as well as the electrical products from the mid of April. That's when the second wave had hit the country, and from that we had seen an impact coming in over there. Especially when you look at it on products like cooling products such as RACs, fan and air coolers, that obviously saw an impact because that was the main summer season which was impacted for most of these companies as well. So that surely saw impact, but channel checks started suggesting that they had started seeing a recovery coming in from the month of June as well, slow and steady, but they started seeing a recovery coming in. Now, talking about the other important segment is the cable and wire segment. That actually is expected to continue to outperform, given that the infra projects had continued during this time, the construction activities were also continuing during this time, so the interruption was not much during this period, and that is why the cables wire segments are expected to outperform. Now, obviously, let's shift focus and now talk about Havells earnings. Now, optically, obviously, it's a very strong set of numbers that you will be seeing for most companies, but let's not forget there's a low base also which has been favoring most of these companies. So revenue is expected to be at around 2,214 crores, growing by 50% on a year-on-year basis. Profits of the company expected to grow by around 149%, coming in at 158 crores is what the profit is what we're expecting. And in terms of the margins of the company, we're expecting it to see an expansion and 11.7% versus 8.8%. So strong performance optically is what is expected from Havells. But let's not forget that what is actually performing and supporting the revenue is the price hikes also, as well as the low base, which is supporting the overall earnings of the company. Now, construction activities, like I mentioned before, had continued even during this period of the pandemic, and that is expected to help drive the demand for electrical goods for Havells as well. Now, that is why a strong growth is what we're expecting in coming in the wire and cable segment as well as the ECD segment, which will result in a 50% growth on a year-on-year basis. Lloyd's is expected to report a revenue growth of 45%, around 40 to 45% on a year-on-year basis. And in terms of the margins, despite the commodity inflation, we're expecting the margins to improve, mainly aided by the cost initiatives that the company has taken, as well as the price hikes also which the company has taken. Now, factors that we'll be watching out for in terms of commentary in terms of the demand scenario, how are the demand trends shaping up, what is the Lloyd strategy going forward in the second half of this year as well, what are the current inventory levels, especially for the RAC products, is something that we'll be watching out for and closely waiting for the commentary on that as well. And these are the factors that we should watch out for in terms of Havells in Q1 FY22.